Wednesday, December 5th, 2018, Monaco 64, home of alternative economics and contrarian views. This morning I want to talk about the great robbery of 1933, and I'll explain later on what it is exactly. I'll talk about the markets, of course, before I go on to it. Today, the markets are supposed to be closed. Well, they are officially, but the futures will keep trading. I assume they're trading this morning. Europe is open. The foreign exchange markets are open. Precious metals are trading. So, and alongside this great heist, which I'll let you know, it was the gold confiscation executive order by FDR. And I'll talk about why I don't think there will be confiscation of precious metals today. And I'll tell you how they're already confiscating your metals today through very nefariously and stealthily. And I'll look at a book as well called The Law by Frederick Bastiat. It's one of my favorites, and I've spoken about it a lot. Some of you probably already know it and have bought it. It's not a long book. I highly recommend it. And how it's related to this great heist of 1933. In my opinion, one of the great crimes ever. At least one of the great thefts ever. Not only of the 20th century, but ever, as I said. So it's 8 a.m. London. Yesterday had quite an interesting day. The stock market, to say the least. The Dow dropped 799 points, or 3.1%. S&P dropped 90, or 3.25%. And the NASDAQ composite dropped 283, or 3.8%. So what are we doing this morning? The Dow future is up 40 at 25,086. So we did close just above that 25,000 yesterday. Overnight, we have been below 25,000. The low has been 24,980. S&P is up 10, 1/3% at 2709. NASDAQ 100 futures up 36, or 0.5%. Gold and silver did very well yesterday. Gold got up just above 1240. I think 1242 was the high. But we've drifted back down. We're down about almost $5 here at 1233.70. The high's been 1240. I did say that 35 to 40 area would be strong resistance. So they're still, keeping gold below that resistance. I think we're going to break through that level by the end of the week, personally. We'll have to see, of course. Silver got up to 1467 yesterday, and it's disappointing always with silver these days. Don't think it will last long. I mean, right now we're at 1442, so we're over 30 cents below yesterday's high, 10 cents down on the close yesterday. So this morning the low's been 1441.5, right where we are right now, and the high is 1457. Currency wise, the dollar started fairly weak yesterday and then strengthened during the day. The pound made an 18-month low around 126.65, if I'm not mistaken. We're just around 127 right now, down 16. It's key support there. A lot of theater going on still about Brexit. It's just ridiculous. But personally, I think the pound's going to keep dropping against the dollar. Euro's at 113.26, down 15. Dollar has recovered against the yen. It's up 0.25%. Yesterday, the dollar dropped quite a bit against the yen. So we're at 113.06. The dollar has also recovered a bit against the Chinese currency, the yuan. We're at 686.50, up 0.25%. WTI is down 1.7% at 52.37. Brent is down also 1 3/4 at just below 61. And of course, there's a lot of talk about the yield curve inverting, not only yesterday, but the day before. The day before yesterday inverted between the 3-year and the 5-year. Yesterday, we saw, at least I did see, a little bit of an inversion between the 2 and the 5. I guess the next step will be the 2s and the 10s. What that is showing is that the market feels the Federal Reserve is too aggressive with its draining of monetary policy or tightening, and the Fed controls the short-term rates, and the market thinks that longer term the economy will slow down, and that's why the longer term yields are getting lower, and that usually signals a recession. It makes it harder for banks to make profits, because banks usually do something that's quite irresponsible, but they do it. They borrow short-term cheap, and they lend long-term, and they make a profit. But when the curve goes like that, it's not advantageous for them to borrow short-term higher and lend long-term cheaper. Why not? Well, because when you lend long-term, long-term bonds are riskier than short-term bonds, so you could lose a lot more by doing that. So it takes that profit, how can I say, opportunity away from them, and that's why it's not positive for the economy either, because banks in this fiat money world drive credit. If you think the Monaco 64 channel adds value to you and you'd like to contribute or help the channel, check the links below in the description. All right, the great heist of 1933. What was that? Well, we'll go back first to the Emergency Banking Act of 1933 as well. And I'll read a little bit about this here. And it's in relation to the banking crisis that was at its, was really raging just when President Roosevelt was inaugurated. People had lost confidence in the financial system. The Federal Reserve had done a great job, right? And they were created in 1913 to stop all these financial crises, to make the currency more elastic, right? And we had a complete collapse almost of the whole U.S. banking system. Well done, Federal Reserve. You did well as well in 2008, Federal Reserve, and that's why we need you. Anyway, it says here, Wikipedia, the Emergency Banking Act, Public Law 148, Statute 1, March 9, 1933, was an act passed by the United States Congress in March 1933 in an attempt to stabilize the banking system. Well, I thought the Federal Reserve was supposed to do that job, right? Beginning on February 14, 1933, Michigan, an industrial state which had been hit particularly hard by the Great Depression, declared an 8-day bank holiday. Fears of other bank closures spread from state to state as people rushed to withdraw their deposits while they still could do so. While deposits back then were not paper money, they were gold, right? You deposit gold at the bank. We were still under a gold standard. Within weeks, all other states held their own bank holidays in an attempt to stem the bank runs. On March 4th, Delaware became the 48th and last state to close its banks. Following his inauguration on March 4th, 1933, President Franklin Roosevelt set out to rebuild confidence in the nation's banking system. Another great job by the Federal Reserve. On March 6th, he declared a 4-day national banking holiday that kept all banks shut until Congress could act. A draft law prepared by the Treasury staff during Herbert Hoover's administration was passed on March 9th. The new law allowed the 12 Federal Reserve banks to issue additional currency on good assets so that the banks that reopened would be able to meet every legitimate call. And it goes on to say here, 1 month later, on April 5th, 1933, President Roosevelt signed Executive Order 6102, criminalizing the possession of monetary gold by any individual, partnership, association, or corporation. And Congress passed a similar resolution in June 1933. So let's go into Executive Order 6102. And why do they have to do that? Well, because they had to stop people taking their gold from the banks, and they gave the Federal Reserve also the power to issue paper money on good assets, which I think is questionable. How can it, because a month later they made gold illegal monetarily. So what this did is stop people trying to hoard gold, as they call it. You're bad if you hoard, right? But central banks can hoard gold. The U.S. Treasury can hoard gold, but not you. Executive Order 6102, a U.S. presidential executive order signed on April 5th, forbidding the hoarding of gold coin, gold bullion, and gold certificates within the continental United States. So that was the great crime of 1933, great heist. As Frederick Bastiat says, the law is supposed to protect the individual. Says here, if this is true, this is from page 3, what is the law? If this is true, then nothing can be more evident than this. The law is the organization of the natural right of lawful defense. It is the substitution of a common force for individual forces. And this common force is to do only what the individual forces have a natural and lawful right to do, to protect persons, liberty, and properties, to maintain the right of each, and to cause justice to reign over us all. So by signing this executive order, FDR basically went totally against the law, natural law. And I would also add that the Emergency Banking Act was an amendment to the Trading with Enemy Act of 1917. And that's why these people, the shadow government, that's why they love wars, because it gives them the opportunity to pass these laws that normally in peacetime you wouldn't be able to pass, and they keep it in the books. So that's another thing I wanted to add. So yeah, highly recommend this book. I'll put a link to it below in the description. You can get it on Amazon, or you could probably even find a free PDF to read it. Highly recommend it. So what about the Gold Reserve Act of 1934? That was an even more humiliating and nefarious act. So in 1933, and I'll read here about the executive order, right? It says, under executive order of the President issued April 5th, 1933, all persons are required to deliver on or before May 1st, 1933, all gold coin, gold bullion, and gold certificates now owned by them to a Federal Reserve Bank. That bank, that did such a good job in running the system that almost collapsed. So you got to give your money to them. Branch or agency or to any member bank of the Federal Reserve System. So amazing. And it says at the bottom here, this is what is important: criminal penalties for violation of the executive order, $10,000 fine or 10 years imprisonment, or both, as provided in Section 9 of the order. So, well done, FDR. Where's the law? If you took an ounce worth of gold to your local Federal Reserve Bank, they'd give you $20.67, Federal Reserve notes, right? But then in January 30th, 1934, Congress passed a Gold Reserve Act, which revalued the price of gold to $34 an ounce. So all that gold that the Federal Reserve and the Treasury stole from the American people was instantly worth 70% more, I think, 70 or 75. So with that profit, they started the Exchange Stabilization Fund, right? It says here, Exchange Stabilization Fund is an emergency reserve fund of the U.S. Treasury Department. Exchange Stabilization Fund was established at the U.S. Treasury Department by a provision of the Gold Reserve Act of 1934. So how much money did they put into this? Well, there are estimates here, but it says here on Wikipedia, wealth transferred compared to the U.S. economy. They think it's about it was about 190 billion of today's dollar. You know, with that profit that they made, and that profit, you know, that slush fund for the shadow government, which is run by the Treasury, has been, you know, what is funding the shadow government, in my opinion, for the last, you know, 80 years or so. And who benefits from this? Well, the banks benefit from this because the, you know, JP Morgan is the Treasury's bank. Every time they get an order from the ESF, they front run it probably, and it's all done secretly, of course, because of national security. You know, the Treasury is not going to investigate JP Morgan, and that's probably why they get away with all their shenanigans in the silver market. So there you go, the great heist of 1933. Why do I think it's not going to happen today? Well, because gold is not a monetary asset really anymore, even though we do see gold as money. But, you know, legally it's not. And I think they're doing a great job already of suppressing, you know, the price of gold. It discourages millions of people of having gold. That in and of itself is a confiscation, in my opinion. That's why they won't do it. Same for silver. So if you enjoyed this video, make sure you hit that like button, share it far and wide, subscribe to my channel if you haven't yet. And you can also follow me on Steemit, DTube, and on Twitter. I wish you all a great day, and I'll talk to you later. Take care. Bye.